I just paid $4.20 a gallon to fill up my car. That tells me the bear market in weed stocks is over. Hi, welcome back to Chart Wrap. I am Mike Merson, your managing editor, and I am here, as always, to bring you the hottest and the spiciest charts that I found throughout this week in True Options Masters. If you like this content, be sure to hit the like button, subscribe, all those fun things people tell you to do on YouTube. And most importantly of all, subscribe to True Options Masters, the greatest options trading newsletter in the world, to get my chart insights every single weekday of the week. But also, much more importantly than that, the insights of our actual True Options Masters who have been studying the markets for decades and know the options market like the back of their hand. But what we're here to do today is Chart Wrap. And I have a lot of charts to show you this week, more than you bargained for if you've been following along, but I promise we're going to have some interesting insights. So let's get right into it. We're going to start off with Apple. Okay, so something you may or may not know about Apple is that Apple makes up, let's say conservatively, more than 5% of the S&P 500. So it's 500 companies, and Apple is 1/20th of those 500 companies by market cap. That's significant. So when Apple makes a move, whole market tends to follow. So what we're seeing today on the daily chart is Apple is coming in on the downside, trading about $155 a share. Now the reason we looked at Apple in the first place was back on Wednesday. Amber Hessla kicked off her Options Bootcamp series, an amazing series. If you're just getting started with options, you want to subscribe to Tom right now, start reading Options Bootcamp. It'll tell you everything you need to know about options every single Wednesday. But the reason we looked at Apple was because she suggested, just kind of offhandedly as an example, a call option on Apple. I think it was the 175 strike, dated out to April 14th. So I figure, okay, is this a viable trade? Is this not just an example? Is this potentially a viable trade? So let's extend this out to April, I believe April 14th is the expiration. And what kind of a move would Apple need to make to get to 175, or 176 rather, bucks a share, so that we're well enough in the money to make some money on the trade? You'll learn more about that during Options Bootcamp. Previously it wasn't a 9% move, now it's a 13-14% move, which looks and seems less likely. But Apple has made some really, really big single-day moves in the not-so-distant past. I mean, we have this one right here. This was about, from bottom to top, it was about a 7% move. And I'm sure there's many, many more examples that we could go back and find, multi-day rallies that definitely span this sort of range, and we have more than a month to do it. So, but Mike, you're saying stocks are in a bear trend. Why would Apple turn around right now and send everything higher? Because of the momentum indicators. We talk about the momentum indicators a lot because they're a really good signal of reversals. Here I have the RSI 14 period and the MACD 1226. These are your standard measurements on both of them. We have rising lows on both. Less evidence on the MACD, but you definitely have a series of higher lows coming in on Apple, even as the price makes a series of lower lows, especially in today's trading. Generally, when you see this, it is a sign that the momentum on the downside is being washed out. There's not much more that Apple is going to fall here because the sellers are not selling as aggressively, as quickly, even though it might appear that when you look at the day-to-day action. So even if Apple doesn't get to $176 a share here, I think buying the 175 strike, it's pretty out of the money. It's not too expensive an option. If you think stocks reverse in the next month here, that's probably a pretty good bet. So let's move on. I did mention weed stocks in our goofy intro, so I think we should take a look at them. Let's go to the weekly chart. So I want to take a long-term look at this. This is MJ, okay? This is the marijuana ETF. To be more specific, the ETF MJ Alternative Harvest ETF. You know what they're alternatively harvesting. It's weed. Okay, so what do we see here? Launched in 2016, kind of chip, chop back and forth for a while. Big kind of a bubble here at the end of 2018, a recovery, and then just a brutal bear market. But then in 2020 and 2021, like lots of things, it just went vertical. And then, I mean, you could see the rejection on this weekly candle here. We went all the way to the top and rejected all the way back down. And that was the end of the trend. Weed stocks have been in a bear trend ever since. We are testing the all-time low in MJ this week. Okay? Weed as an industry is growing alongside this bear market. I don't have numbers to show you right now, but more and more states are legalizing. People are using recreational pot more and more. People are using medical pot more and more. My mom, who lambasted me for smoking cannabis when I was between 16 and 18, I'll just come out and say that. Why not? It's destigmatized now. She has a medical cannabis license, and I don't. So what does that tell you? It is being accepted by the mainstream. Even folks in their 60s and 70s are coming around to the idea of pot being normalized. And this is after seeing stuff like Reefer Madness. At the same time, we have this ETF representing the marijuana industry hitting all-time lows into, what do we see again? Positive divergence on the MACD and the RSI. Fellas, ladies, this is a bid, okay? MJ at $8 is going to look stupid 10 years from now. This industry is not going away. Much like blockchain, though we're not going to talk about blockchain today. I've spoiled you too much with that lately. We are going to look at some individual cannabis equities if you want to get a little riskier later on in this chart wrap. But I just wanted to point that out that, yes, gas prices are at $4.20 a gallon. That's hilarious. But what's not hilarious is the opportunity looking us in the face in weed stocks today. Now, let's move on to something I was right about before we get into something I was very much wrong about. And I will wipe that egg off my face, don't you worry. We're going to talk about gold. So, a few weeks ago, I noticed that gold had popped out of this range here. This descending resistance, this rising support, brought it up and out, and it broke out of an ascending triangle pattern. And it broke out significantly in the last few weeks. So if you were buying gold back here at 1860, 50 something, good for you. I appreciate you listening to me. And then when things really started heating up in Ukraine with Russia, gold continued rallying. And it put in basically a new all-time high. It came right up against the all-time high that it set in August of 2020. Now, what do I think is going to happen with gold prices in the short term? I think we're going to come in. I think we're going to go lower. We might go all the way back down to 1900 because that would be a really good horizontal SR test, support resistance test. But then I think we're going to bounce off that and continue rallying to really confirm all-time highs here. Now, I was telling you to bet on all-time highs. Oh, heck, when did I write about gold? Monday? I think that was March 7th. Yes, Monday. And you would have done well, but you would have had to be quick if you closed that trade out. So if you're still in that trade, if you dated yourself a little bit longer out, I think you might do okay if you hold through it. Because we're probably going to see some short-term pain here in gold. But let's just look at the hourly chart just to see if we could, see any kind of bullish stuff going on. MACD's coming up a little bit here. Considering the lower lows, getting higher lows in the MACD, which has been oversold for gold on the longer time frames for quite a while. That's pretty encouraging. I think gold does well here. Let's go ahead and add another horizontal resistance here. That seems about right. Lots of tests. See, we had this pop, and then we're testing that as support. This is how technical analysis works, folks. Breakouts, retests. Breakouts, retests. Let's move along to oil. Yeah, this was a pretty, it wasn't the worst call I've ever made, but definitely wasn't one of my best. Monday, this was the one I talked about Monday. Gold I talked about on Tuesday. Monday, I said don't buy oil stocks today. I said don't buy oil stocks today. So far that's been wrong, because the next day they ripped, then came in, and then we've been kind of waffling around. Of course, XLE is more than oil. There's some natural gas exposure in there. There might even be some alternative energy exposure. But yeah, this was not a great call. The momentum in oil is strong. I know that our options masters are actually on both sides of the aisle on this. Mike Carr and Chris kind of bullish on, Mike Carr and Amber are pretty bullish on oil here, where I think Chris is a little bit more bearish, and actually Chad is kind of bullish too, so Chris might be alone on that one. But it is fairly overbought. If we look at it on this daily chart, I mean, we are hitting this overbought level and coming back in multiple times here. MACD is getting up there as well. But, I mean, the MACD is still recovering from this devastation back in 2020 when the oil price went negative. Times of war, oil goes higher. I wouldn't bet against oil here. If you're going to do it, you know, be sure to be quick with your trades. And yeah, that's really all I have to say about oil. Not an oil expert. I do want to bring up just like a chart of XOM. See more of a pure play style trade on oil. Yeah, it's looking pretty similar. I remember I rather foolishly sold XOM back here at around 50 bucks. That was after buying it during the negative oil crisis, so I did well, but certainly not as well as I could have. So, word to the wise, if you own great stocks, don't sell them. Sell your bad stocks. And we all know about bad stocks. And I'm going to talk about some of my bad stocks right now. So I try to get cute and play the weed stock resurgence by picking a few names myself. Turns out I'm not a great stock picker. Turns out I'm maybe not the greatest stock picker in the world, because I picked True Leaf Cannabis. True Leaf Cannabis, you might have heard of. It is one of the actually profitable marijuana companies in the United States. And that is actually reflected fairly well in its stock price, because it has held on to some of its gains since early 2020, when it was down here at $5 a share. Now we're at 18. All-time high was about 50 bucks. Okay, I bought it. By the way, full disclosure, I own this one, so do with that what you will. Not financial advice. Do your own research. I was buying it around here. I was really enjoying myself up here, and now we're kind of back to where we were. I think this is going to be one of the standout cannabis companies in the future. And if you're looking for something a little less risky, then this is probably one to be looking at, because just look at the chart. It's kept its gains a lot better than a lot of other weed companies. Let's look at TLRY. TLRY was essentially a meme stock when this thing came out. I mean, just look at this price rise. We're on the log chart here, so you can't even really see it, but yeah, let's get off the log chart. This thing went up 1,400, almost 1,500% from its IPO, and since then, it looks like an S-word coin. For those of you in the know on crypto, this thing has just been brutalized, and look at where it is today. It's at $4. IPO'd it 21. That's a really rough estimate. Let's zoom in here. Yeah, that's looking like 21 bucks, and today it's at 1/4 of its IPO price. So, oh yeah, much easier to see on the log chart. So this is one a lot riskier, but it does have that name recognition. You know, people will remember the crazy things it did, where it went to $250 a share, and they might want to pile in and try to capture some of that gain again. But this does not seem like a long-term holding to me, even though did beat on earnings. Did beat on earnings recently. A minor, well, not a minor surprise to the upside, excuse me, 115% surprise to the upside on earnings per share. One to watch. And then this one. This is another one I own. Oxley Cannabis. I'm just going to go ahead and say it. Don't buy this one. I mean, the market cap is super tiny, and it just seems a lot like Tilray, not the most productive of cannabis companies. But if cannabis is going to persist in the future and this company has to go bankrupt, it'll probably be worth more than 11 cents, right? Maybe? We'll see on this one. Not much to say about it. It's just kind of to show you the difference between these smaller cannabis companies and a more successful cannabis company. So you should bet on MJ first and foremost. And if you're going to try to pick stocks, try to pick companies that make money. You know, they were making a lot of money back here, and were beating on earnings per share because their stock price wasn't so inflated. So you can see as they rose up, suddenly they weren't beating on earnings per share anymore. Makes a lot of sense. Still beating on revenue, I'd like to point out, in every single one of these earnings reports. Do with that what you will. I think if you're going to pick any weed company, this is a good one. Not financial advice. Do your own research. I own this one. And so on and so forth. All right. That's going to wrap up Chart Wrap. I hate saying wrap twice. Anyway, thank you for joining me on this constant journey of looking through charts here at my home office / bedroom setup. I appreciate you as a True Options Master subscriber, both to our e-letter and our channel. If you're not already subscribed to our channel, be sure to do that. Be sure to subscribe to our e-letter so you're getting fresh options, insights, actionable trading advice, education, guidance, anything you could ask for with regards to the world of options in your inbox 7 days a week. If you're already subscribed, check out Options Arena tomorrow. It's a real doozy. And that's going to do it for me. I'm Mike Mercer, your managing editor, signing off. Have a kick-ass weekend, everyone. See you later.